I'm Jennifer Hughes with Coldwell Banker Residential Brokerage, and I'm here today with Rick Frandsen of Guaranteed Rate Mortgage Company. And today we'll be discussing the topic of first-time homebuyers. So Rick, what kind of lending options are available for the first-time homebuyer?
That's a good question, Jennifer. There's really four main types of loan options available for the person making their first purchase: FHA, VA, USDA, and conventional loans, which are also known as Fannie Mae, Freddie Mac. There's pros and cons on each of these programs. It really depends on the borrower's qualifying income, assets, credit score, to determine which of these programs will best fit the borrower.
Okay, and what are the benefits of going with one program, such as FHA versus a conventional loan, or one of the other loans?
Well, FHA actually has a lot of advantages over conventional loan. It has a low down payment, 3.5%. So on a $300,000 purchase, that would be $10,500. FHA has flexible and forgiving underwriting standards. That's very important. So they allow for a higher debt to income ratios, they allow for a lower credit score, and also FHA can allow for a non-occupant co-borrower. The whole down payment can be a gift on an FHA loan, and as I mentioned earlier, they will allow for lower credit scores per borrower.
So why would a borrower then choose a conventional loan versus an FHA?
Great.
What are the disadvantages of an FHA or the benefits of a conventional loan?
Thank you. Great question, Jennifer. One of the biggest disadvantages of the FHA loan is the mortgage insurance. FHA charges upfront mortgage insurance and monthly. The upfront fee is 1.75%. So again, in our example of a $300,000 purchase, that would be over $5,000. They also charge a monthly fee based on, again, your down payment and how long you have the loan term, 15 years or 30 years. That down payment, that monthly mortgage insurance will last for the entire duration of the loan on an FHA loan if they're putting down the standard 3.5%.
So tell me about conventional loans. Why would my borrowers choose this type of plan?
Well, with a conventional loan, you can also put down as little as 3% or 5%, depending on the borrower. Conventional loans do not have upfront mortgage insurance. That's really a big benefit of conventional loans. Their monthly mortgage insurance is going to be based on their credit score and down payment. So the higher the credit score and the larger the down payment, the lower the monthly mortgage insurance on a conventional loan. If you put down 20%, there's no mortgage insurance, so that's a great deal. Conventional loans also can be used to purchase second homes and investment properties, and they tend to go a little bit higher on the loan amounts.
What are the disadvantages of conventional loans?
So with conventional, the underwriting standards are stricter. So they're going to not allow as high debt to income. They're going to require a better credit score on a conventional loan. Those are really the biggest disadvantage of a conventional loan.
Okay, and what are the other two loans that you mentioned, the USDA and the VA?
Well, those we save the best for last. With the VA loan, it's zero down payment, no monthly mortgage insurance, no upfront mortgage insurance, and the rates tend to be a little bit better than a conventional loan. Now, these loans are restricted to members of our armed forces, so they would have to have the VA eligibility to qualify for a VA loan. The USDA loan, also an excellent loan, excellent rates, zero down payment. USDA loan is, though, constricted to rural areas. So if you went to buy a home in Highlands Ranch, Centennial, Denver, those loans would not be available.
And what if my borrower does not have 3.5% or 5% down? Are there loan programs that they can still get into?
Absolutely. So we have down payment assistance programs, and these provide typically second loans that go up to 3.5% to 4% of the purchase price. So that allows the borrower to come in sometimes as low as $2,000 to $5,000 depending on the situation. They do, of course, have to qualify based on credit score, debt to income, just like all these loans, and they could be done either as a conventional or FHA loan.
Okay, well, great. Thanks, Rick. I appreciate your time, and I'll look forward to our chat next time.
Thank you very much, Jennifer.
Thanks.
It was nice talking to you.
Thank you.